We don't want to be in a technology company where people don't want to embrace technology. In AI, whoever has the data controls what's going on. For me, it is the stupidest thing on planet Earth that I own data that is gold, and I will hire a startup company that is in AI, and I will give them my data to resolve my problem.
I'm assuming there's still a human element to all of this, right?
From a fraud prevention, transaction monitoring, risk underwriting, the AI today already does a much better job than any human, and nobody is afraid of its decision making. We have technology and we can adopt fast. Everything like this is an opportunity.
Hello, ladies and gentlemen, and welcome to today's episode of Couchonomics with Arjun. Yet again, we have a virtual episode. I think this is becoming a bit of a trend, but I think this is what's allowed me to kind of reach out to people from across the world. For this episode, I have someone joining me who actually shared the stage a few months back at the Dubai FinTech Summit. Unfortunately, that was like a 12 or a 15-minute discussion, so we agreed to put a date in the diary so that we could reconnect and sort of carry on the discussion. Joining me today is Arik Shtilman. Arik is the co-founder and CEO of Rapyd. Now, I'm expecting most of you have heard of Rapyd. They have grown rapidly over the few years that I've known them. If I'm not wrong, and Arik will correct me, they are now $1 billion revenue company, and they've had a very impressive announcement over the last 1 week, which we'll dwell into. But enough with that lengthy introduction. Let me invite Arik to the show. Arik, welcome to the virtual couch, I guess.
Thank you very much for having me. Excited.
Pleasure. So, Arik, we'll start a little bit where we left in Dubai when we were together on the stage. Obviously, we'll have to recap a few things because not everybody there is on the show. I'm assuming this is a much bigger audience. But I think it'll be a great scene setting to take your perspective. And I'll just kind of throw it right open to say, what is the state of nation or state of the nation in the world of payments, if I was to sort of say that? And let me add the second question or a sub-question to it at the same time, which is, where are you actually seeing the value accruing, right, across acceptance, payouts, wallets, places like digital identity compliance?
I think that what happens now is that we're in a very special moment in payments where there are two basically huge forces that are getting into payments and are changing everything. People expected for years that APMs will change payments, Google Pay, Apple Pay. These were nice add-ons, but they never change really the market. Even not real-time bank payments like Pix and etc. that came in Brazil or UPI in India. They really didn't change payments. It just were a payment method or something that disrupted Visa and MasterCard. I think that now AI and stablecoins are really shaking up everything in payments. I think companies in payments that are not going to be AI first will not exist in 3 years time frame, because a lot of the work that is done in payments by humans should not be done really by humans. It's like seriously automated by AI much better, because there's a lot of manual labor that is very systematic that happens there. And I think stable coins are really shaking up everything that is related to money movement. It's not really the payment itself or the payout itself, but it's really how things done, working capital usage, liquidity pools, costs of capital. And I think these two things are really, really going to shake the payments world big time.
So I'm gonna ask you, but why does stablecoin feel like a year ago nobody wanted to talk about it, or people were talking about it, but it was a very, very small group of people, and then in the last 12 months it's blown? Is it largely because of regulation, or what, have people woken up?
I think you mean adoption of the stablecoin.
Yeah, just adoption. Yeah, exactly.
It's Donald Trump.
Okay.
As simple as this. As soon as Trump was elected, overnight, I would say that all the banks that Rapyd banks with, and we bank with everybody from JP Morgan City, UBS in Asia, Barclays, HSBC. I think we have like 90 banks that we bank with. Overnight, after he was elected, the tolerance to the word crypto changed. If in the past it was don't touch it, if you're regulated your payments, you're not crypto, money laundering, blah blah blah, overnight accepted the fact that it is going to be legit, and over a very short time frame of several months, everybody is willing to do it. And I think this is crypto now. Like, without Trump being elected in the US, I don't see a situation that it would have been where it is now. And I think that the fact that the big banks were willing to accept companies like ours that are fiat payments companies, but they also somehow do crypto, change completely, our ability to touch it, and also others.
Okay. And you mentioned a very interesting thing in your first response, which is, you brought up UPI and Pix, where you said they were great add-ons. They obviously targeted the cards volume, but largely in both markets where cards were not big. Here's my sort of question to you, and it's a bit of a challenge, right? For me, both Pix and UPI, similar to stable coins, is more of an infrastructure play, right? It was new infrastructure. Uh, why would you say that real-time payments, which was Pix and UPI, not as seismic in impact? Because if you were to look at those two economies, right, I would argue that doesn't matter what form factor it is going forward, they've built new rails.
They build a new payment method. Rails are built when you do cross-border. They're not cross-border based payment methods, right? Real rails are rails that everybody can use, right? Swift is a rail because you can do it, right? You have SEPA as a rail because it connected all the European countries. Pix and UPI, they're domestic. By the way, the Pay Now in Singapore is also domestic. So it's not really rails. It's just a very strong competition to Visa, MasterCard, Amex, whatever you want, that hit them big time. But I would say that stablecoin is the real rails, right? Because anywhere, anytime, any country, 24 by 7, 15 minutes maximum, to get the money. This is rails, but it's like game changing rails. And I will tell you an example. Rapyd, because we operate in more than 100 countries across the globe, and we have, I think, like 20 different liquidity hubs where we keep a lot of money and we move the money around the world based on our requirements. We used, I would say, around $150 million of our own cash working capital because we have to move money all the time. This is shrinking to 80 because of stablecoin. And it's just because the money moves 15 minutes. When you move in 15 minutes, I think I will be able to get to $40 million of working capital and double the volume that I have, right? So it is drama. This is real rates. And the ability to move money, get confirmation for the payment, not going through correspondent banks, not having surprises of, oh, the money didn't arrive, please provide additional documents. All this stuff changes dramatically our industry.
Okay. Let's double click on cross border payments. I'll start on the negative. So, what do you still see as some of the biggest sort of blockers for true instant cross border payments, even though stablecoins are coming on board?
I think at the end of the day, the stablecoins resolve cross-border trade as long as the regulators will not stop it from resolving. And at the current stage, the regulators embrace it one way or another. They agree to it in the majority of the countries. I really hope that the central banks and the regulators will not change their mind at a certain stage and they will want to issue their own cryptocurrency, and then all this chaos will begin again. I would say that we see a significant shift in flows over 2025 versus 2024 in doing invoice payments for cross-border trade in cryptocurrencies. It's like it is growing, doubling like month over month. People are not afraid of it, not the sender, not the receiver. They understand the value in it. The cost of capital is significantly lower, and I think that the only thing that can stop it from taking over is a significant central bank or regulator to say that, okay, I don't want to use it anymore. Like, I don't control it, I don't print it. You know the political issues around it. But I would say that USDC has a very high chance not to be stopped. Circle, publicly traded company, works with the Fed. I think that it has a very strong chance. USDT question mark. What will happen long term, and then comes in the question: will really other central banks and regulators will agree that an American company with USDC, controls their cross-border trade like this because they have no ability to influence it, which is going to be very interesting.
Okay, and on the back of the fact that we are seeing what I might use the word the proliferation of stable coins, nearly everybody is issuing one, and a number of banks are launching it. You've also got J.P. Morgan, which is sort of has a platform called Kinexus, which is about sort of tokenized deposits and moving money cross border. I know it's a little bit more closed loop versus it. How do you sort of see? So two parts to this question. One is, how do you see this proliferation of stable coins going, right? So, because there will be some interoperability challenges potentially, although you could argue that as long as the layer ones are similar, then interoperability potentially gets solved. But I'll let you answer. You're way more accomplished in the technicalities of this. The second question, if I could add to it, is from your perspective in Rapyd, right? You move a lot of money around across, I think you said 140 odd countries, right? 100 plus countries. How do you see the shift changing from the various types of, I guess, rails or type of money which should be
So
dealing
I think that at a certain stage, which is, I thought it's going to happen like last year. I thought it's going to happen 5, 7 years from now, but I think literally it has to happen in the next 2, 3 years. I think Swift and the correspondent banks are basically in a rush to try and save their business, and they will get into some kind of a partnership with USDC or with somebody else, or maybe they will try to do a stupid move of issuing their own thing, which cannot end up well because all of us understand how it plays out. But they have to do something or they're out of business, right? And I think that I remember in 2017 I saw Ripple for the first time trying to do it with XRP, and back then they way were ahead of the time, but they had this concept of the currency and cross border, but they didn't have liquidity and etc. I think that stable coins basically leapfrogged, what they tried to do back then with Ripple. And I think that at the end of the day, the banks and Swift will have to decide if you cannot beat them, join them, or they will try to push the regulators to try to stop, the stable coins. But I really don't see any reason why a cross-border money movement transaction will not be done on a stable coin in 2025 and 26. And if you will go back to my interviews from 22, 23, I'm not a crypto guy. I don't believe in it as, as a payment currency for the consumer. It's not what I believe. But what I've seen in the last year with the adoption and how it works and how the liquidity actually exists in the market for it, because it's a stable coin, yeah, I don't think something can stop it unless a regulator or a central bank will decide to stop it.
But then I argue the point: why would we at all need Swift in any form or shape?
There is no need for Swift, but your fiat sits in a bank. So in order to avoid you moving the money out of the bank to an exchange, exchanging it, and then this entire super slow process of moving money out from a fiat bank account to an exchange, converting and etc. You want it to be seamless. Now I'm sure that a bank like Revolut, yeah, it's not a problem, or Wise or whatever it is, they can do it on their own. But all the banks that have 99.9% of the money in the world, they will not be able to build it, in the same way like the neobanks. So this is why Swift will have to turn itself into probably crypto enabled, or it will disappear because there is no real reason to use it. And there are still an issue of addresses and how it is converted and etc. So this is why you still need it, but it will have to move. And this will take out of business the correspondent banks. And a lot of banks are making a lot of money from being correspondents.
So this is a very interesting point that you raised about sort of bank and correspondent bank. So one of the ways we're seeing banks respond is that they're trying to build their own closed loop, I guess, rails, or basically saying, we bank with you in country A, we bank with you in country B, right? Build a closed loop, I guess, money transfer infrastructure with us, and we'll subsidize you in a way that you stay with us. Are we going to see a proliferation of that? Because at least in the B2C or the C2C movement of money, that seems to be a shift, at least in the Middle East, right? We're in the second largest remittance country here, and the amount of banks that are now talking to the so-called remittance companies wanting to do this is crazy.
Yeah, it's crazy, but it makes sense. Like
It makes perfect sense, but then
the
does it
thing
not
the thing
flow?
is the thing is with the remittances is that not like B2B payments and not like Swift replacement. Remittances are a huge money laundering risk, and this is why regulators are not very eager that crypto or stablecoin would be used for remittances, right? Because this is how you launder money and get it out of the banking system, get it out of the tax system. For B2B payments, it's a little bit more under control. And this is why I think that anybody that is involved would prefer, first of all, to see the B2B cross border payments to go through it. and only later the consumer piece, right?
Okay. No, I get that. I get that. Well, we're seeing stablecoin being used in the middle, if I may say, right? It is all getting off ramped and then going on to stablecoins and then sort of finding its well
Yeah,
back
but
onto on ramp.
people talk about it and they present it, but they don't really do it in C2C remittance. And whoever does it in C2C remittance typically gets into problems with liquidity, with regulators, with whatever, right? Uh, I am a big believer in the B2B side. I'm a big believer in it. In the consumer side, I'm still skeptical.
Still skeptical. Great. So let me then ask you, right? You guys have just announced your stablecoin, right? Talk to us a little bit about it. What is it? Why have you launched your own?
No, so it's not really our own stablecoin, right? It's a partnership that we have with USDC and USDT, and it's actually just we embedded stablecoin into three parts of our stack, right? So we have a tech stack that moves this year $120 billion of fiat money, right,
Mm-hmm.
in 100 plus countries in different currencies, different payment methods, different payouts methods. We launched a year ago stablecoin settlements, which was an offering that allowed our clients, businesses, to be settled in stablecoin instead of being settled, in any other currency that they want. And we saw huge adoption for this. And we just generated in the first 6 months of 2025, $10 million of incremental revenue just from this, which from my perspective was mind blowing because I never thought that I can generate this amount of money from stablecoin settlements. And the next thing that we saw is that a lot of our clients have a huge demand for two things is first of all to enable to do payouts in stablecoins. So we have a lot
Mm-hmm.
of clients that are in the business of payroll and invoice payments and a lot of different types of use cases. And they were basically with a demand that we will open inside our disburse product that was 100% based on fiat disbursements. ACH, Swift, push to card by Visa and MasterCard, they wanted stablecoin payouts. So we basically launched, the stablecoin payouts and enabling them to take directly the fiat that they have inside their Rapyd accounts and move it out in a seamless way in USDT or USDC out of the system, also in a compliant way, which is very important. And we're launching in the 1st of October the ability to pay in our checkout page with stablecoins. So a consumer of one of our clients that gets to a checkout page that today has Visa, MasterCard, Amex, UPI, whatever, he will have also, the ability to pay in stable coins in for the merchant. And then we can settle in fiat or in stable coin back to the merchant, which was another thing that a lot of our clients basically wanted. And we saw them shifting to do business with only crypto companies that only do this piece. So the entire experience was very,
Okay.
we call
Yeah.
it clunky is an understatement. And when we see that there is actually no issue anymore from a regulatory perspective, then why not just put it in the same checkout page and give the experience and also make the money out of it? And this is basically what we've done now.
Okay. So, if I may say, you put a wrapper around the USDC, USDT. You've got some clear use cases, and you're driving, right? Obviously, the economics work to your advantage. Here's my question in terms of how are you harmonizing this from a regulatory perspective, right? Because it's early days from regulation, right? And there is very little harmonization, at least from my perspective, purely looking at it from an academic way, right? But you obviously need to code the regulation into technology, right, for this to actually work at scale. How are you guys sort of managing the diverging regimes, right?
Partnerships with 8 different crypto exchanges that are regulated in the markets where we already launched the offering. They have a license, they're under a regulator, there is a clear crypto regime in the market. If there is no crypto regime, there's no regulation, we're not going to operate in the market because it's going to blow up our fiat licenses that we have. And we already deal with 50 plus regulators today at Rapyd, so we don't want any special problems. So we partner with the right players that operate in the right markets. And every market that is clear from our perspective that it is legal and our partner has a clear license and they have the compliance program, enable program to meet the requirements, we will do it and we'll open the door because we see massive demand coming in.
But I have to ask the question, right? You make it sound simple. It can't be, right?
No,
I'm assuming, yeah, because I'm assuming from your own operating model perspective, you guys have had to come up right? The curve in terms of knowledge. It's a moving place. So talk to me a little bit about. I know I'm getting into the the gut of your business. How are you guys from an operating model perspective? Forget the technology side of it, but just from an organization perspective, evolving, right? And yes, I appreciate people are working with sort of working with 8, 10 of the best exchanges, but let's be honest, the exchanges have had a bit of a, if I may say, a bit of a rocky ride, right? Some of the best ones have had issues with compliance. Some of them actually have had to face some tremendous fraud, so on and so forth. How are you guys adjusting to it in real time?
So first of all, there is a learning curve, and our team that is responsible for the crypto rails project, is coming from the space. It has to adopt on a daily basis. It had to build a dedicated backend that deals, with everything that is related to the crypto movement plus the crypto compliance requirements. We also have a very very tight monitoring on all our crypto related partners. We don't park their money. Our money doesn't sit there for more than minutes, right? So this is another element that is critical in everything that we do with the money movement perspective. We basically keep fiat on our accounts that are safeguarded based on regulation requirements. As soon as we need to move basically to crypto rails, we literally move the money almost real time to the exchange, and in a matter of 15 16 minutes it typically moves converted and moves out. And it's very important from our perspective not to keep money that is sitting there. We do not allow our clients to keep with us any crypto balances. So with us you can keep only fiat balance. You want to keep crypto, you have to go somewhere else. It's not our responsibility. We separate it completely. And a lot of work by legal. So it sounds simple, but the legal piece of creating terms and conditions, changing endless amount of language in our client portal, in our documentation, in the contracts that we have, that required massive lifting, and it is updated on a monthly basis because there's always something that is happening.
Okay, so here's my question to you. Um, there's a massive shift. You're expecting more and more of the money to move in this direction. It is the right thing for you to do. You've obviously addressed a few use cases. I'm sure you'll add more. What's quite interesting is since you've made a move, I'm assuming most of your peers and competitors are going to start doing similar things, right? How are you guys all coming together in terms of engaging with the regulator? Because at some point, the regulators got to make life a little easier for you guys across multiple
So
borders, right?
I think at the end of the day, what will end up happening, but we're still far from this, at least for Rapid, is that the regulator will either force the payment companies to get also a crypto license. So if you want to do it, partnering with the exchange is not going to be really the way to do it. You will have to get your own license, or which makes more sense from my perspective, e-money and crypto licenses will be bundled together because at the end of the day, digital assets, which is crypto, and e-money is the same thing, right? There is no difference, especially if you're dealing with stablecoin. I can understand, by the way, if there would be a separation from a regulatory perspective between stablecoins and any other coin, because stablecoins and fiat is the same thing. There is no difference.
Okay. And are you a betting man? Is it going to be one or the other? Do you think the second
I
one
think
adds
I
too
think
much
that the
complexity?
regulators are not sophisticated enough, and they will force you to get another license.
Yeah,
But it,
and that's
yeah.
unfortunately is what's going to happen because you're actually expecting the regulators to come up that curve too, right? So they have something which is already regulated, it's stable, they can do it again. I'm not trying to defend them. So let me add another dimension, right? So CBDCs were all the rage 2 years ago, right? I remember sitting at I think it was Singapore FinTech Festival last year, and someone put a map on the big stage and said, 94% of the global GDP is currently considering CBDCs either in retail and wholesale. We'll park the retail side for the time being because I think I personally think there are certain challenges. Wholesale CBDCs are interesting, right? We have a few projects. We've got one in the region called Mbridge. I'm assuming you're aware of it too, right? How does you know wholesale CBDC coexists with stablecoin? One question. Do we really need wholesale CBDCs? Because at the end of the day, one is, I guess, more of a legal tender, the other isn't, right? And then what implications does it have on players like you who are moving money to say, here's another sort of format of a digital asset called CBDCs?
I think that the CBDCs will happen. I don't have any doubt, right? I don't see any central bank giving up his currency for Satoshi Nakamoto or whatever it is, not going to happen, right? These dreams of the democratizing stuff and whatever, it's very nice. I don't believe in fairy tales. It's not going to happen. Nobody's going to give up his ability to print money. That's the power. This is the way that you govern. This is the way that you control it. There is no riots and chaos because you own the money. So I would say that CBDCs will exist. Every country will have its own. And then comes in this element that we spoke about Swift using, for example, USDC or USDT or whatever it is. Because at the end of the day, if I was Swift, I would, and of course they will not do it because they're Swift, but I would go and get myself an exchange license in every single market, and I would force the banks to basically give me their digital currency. I would convert it to USDC or USDT or whatever it is, or whatever. I can also invent my own, by the way, if I would be stupid, and then send the money to the other side, and then I would convert it again and give you your own, right? But the central banks cannot give up their own digital currencies. They will do that. That's for sure.
What does that mean to you, though? So wholesale
It's good.
CBDCs come in, B2B
From our
payments.
perspective, every single time. I've been in this industry 9 years. It's not a lot. Majority of the people that I spoke with, 20 years in the industry, 30 years, right? I've been 9 years. Every single time there is a new payment method, rail, or whatever it is, it's very bad news to Visa, MasterCard, and the banks, and extremely good news to payments companies. Because at the end, we are here to solve the complex problem. Swift is not complex. Visa and MasterCard is also not complex unless it is cross-border with some, special use cases. This is why we exist, because we have technology and we can adopt fast. And as long as we remember that this is why we exist, everything like this is an opportunity. I'm excited if this is happening. It just will allow me to quadruple my valuation.
Okay. So you use the word interestingly complex, right? So we're going to move away from rails and stablecoins for a second, right? Correct me if I'm wrong. If I look at it from an outside in perspective, and if you say, has there been sufficient innovation in B2B payments over the last decade compared to other forms of payments? One would argue the case, the answer is no, right? It's been slower, right? And there's a good reason for it to an extent, largely because people don't appreciate that B2B payments comes with a level of complexity, right? It's not just about scale, but there's a level of complexity that comes in, which is it. Let's talk about sort of other challenges around B2B payments that you guys are solving and needs equal attention sort of going forward. I'll throw fraud into it, but it doesn't have to be just fraud. If you look at it from a holistic perspective, what are the 4 or 5 areas you personally think B2B payments needs to be more innovative?
I think that the B2B payments needs to be more innovative in a way that I should be able to send you an invoice. Doesn't matter where you sit in the world. You click on the invoice and you pay it, right? And then all the reporting to the VAT, to the tax, everything is done automatically, right? This is the expectation that I have. Exactly like when I get today from one of the hotels, for example, an email with a payment link, pay your bill before you check in. I click, I put my card, everybody forgets about it. If they give me their wire transfer instructions, boom, everything blows up. I need to go log into my bank. I need an invoice. I need to upload it. I transfer the money. Somebody calls me. Why are you transferring the money? Why this? Withholding taxes. Everything becomes a shit show, right? So the expectation is this will be the experience. Like a checkout page that you get a payment link, money moves as a consumer you don't know. This is what a business needs to be. I don't need to convert currency. I don't need to hear stories, report tax, VAT, withholding, not withholding, all these stories, about this. This needs to be disappear. And this is far from being there.
And so is that an area you guys are investing into beyond just moving money?
Yes, we are heavily invested into solving also problems related to withholding tax globally, a lot of it related to AI, because withholding tax is a very domestic issue. It changes in every country. I think that AI and stablecoin can get businesses, to a much more seamless experience from a payments perspective when they do the B2B payments with an invoice. But still, there are elements that are missing in this mix, right? Because businesses keep their money with the bank. They don't keep it. I want them to keep it with me, but they don't do it, right? So that this missing leg, is still what prevents, for making it completely seamless. But definitely AI and stablecoin can solve, I would say, 60-70% of the friction.
That's interesting. Let's talk a little bit about AI. How are you guys using it?
Heavy users for
Don't
two
don't, don't
years.
do the AI washing, which every fintech is doing today.
No, I have data. I have data that I present. My board and my investors know about it. I have ultra success around AI in compliance, risk, and transaction monitoring, and mediocre minus success in support. We adopted AI 2 years ago. Today, we got to a situation that we shrank our compliance operations team by 90%, and we process 3x more applications on a monthly basis. The average onboarding time of a business that we have is 36 minutes, and the human is not involved in the majority of the times. And even when additional documents or questions are asked, it is done by the machine and it collects the documents. It's not bullshit, can be demoed, there is data. I can show historical charts, I can show the size and the payroll that shrank. Same thing with transaction monitoring, another task that has no advantage of having humans in it. 91%, automatically done, by the machine in a matter of seconds. Same thing with risk and underwriting. The models done by AI shrink the team significantly, and also provides clients a much better experience, including shrinking rolling reserves, increasing rolling reserves, freezing settlements. All this decision-making process is done, by the machine. Backed up, by the way, data presented on a quarterly basis to our investors, and everybody's super happy. And we believe that we will be able by the end of 2027 to double our revenue and shrink the headcount by 50%. This is where we believe we will go to. The challenges that we have with AI is still customer support. Even though it knows the answer and it has the ability to resolve issues, the communication is still far from being human level communication. So it's still clunky and looks like a machine. Working hard to try and resolve it. Not amazing success around that. Can do much better. Still, the goal is to get to the end of next year with 50% less people involved, in customer support tickets.
Interesting. So let me ask a few questions. On the AI side, how much of this is all in-house? How much of this is through partnerships with?
100% in-house. We don't believe in outsourcing or buying products for one real reason. In AI, whoever has the data controls what's going on. For me, it is the stupidest thing on planet Earth that I own data that is gold, and I will hire a startup company that is in AI, and I will give them my data to resolve my problem. If I give them my data, they become much better than me. So I am super paranoid about my data because this is what I have as gold, right? Or oil or gas or whatever you want to use as a very good commodity. And from my perspective, we can build everything in house. We build it on top of both OpenAI and Anthropic, and we're very happy with the results.
Okay. And my second question is, so I've had a few founders in this year where we've talked about how they have ingested AI, right? And there is a whole spectrum, neither suggesting one is bad, one is right, one is bad. One have said, we're using AI, we're selective, we think hard about where AI can be applied, and AI is an adjacency that we bring in, right? I've had founders, and one very interesting founder was someone I actually spoke to last week. It's a bank called Cake. I don't know if you actually bank with them in Vietnam, right? And they basically start every question with, can AI actually do it for them, before they actually say, okay, well, we need to kind of hit a compromise between people and between AI and people. Where on that spectrum is Rapyd today in terms of AI adoption?
We are on the AI all in for every single task that exists. And if you don't believe in it, you don't work here. We have situations, no, what we have situations that the problem of implementing AI is not technology, it's people. People that basically are against it. It's, by the way, the same people that used to work for Blockbuster in 1999 when the internet arrived, right? We don't want to be in a technology company where people don't want to embrace technology, right? And we are all in on that side.
Okay, interesting. Now let's bring in this angle, right? So money's moving faster than it's ever done, right? You've got AI doing things in a autonomous manner, right? Not suggesting that autonomous manner is more riskier than fraud, but it does bring the, if I may say, brings forward the instance, right, of fraud, in the sense that fraud also becomes real time, right? how are you guys seeing it? So how big an issue is it in B2B payments, cross-border fraud? Is it growing? How are you guys addressing
Fraud
it?
is growing all the time because the volumes are growing. AI became a big part of the fraudsters world. They have an ability to create fraud that is in super high quality, especially playing with the banking systems and the call centers and all these idiotic verification processes that exist in some of these old school banking system companies. So it is becoming an issue. And at the end of the day, I think that everybody needs to understand it. It is a battle between two engineering teams, the engineering team of the fraud prevention and the engineering team of the fraudsters. And it's not a battle between people, between risk teams, between compliance teams. It's two algorithms that are going at each other in a digital battle. And if you don't have a super strong AI driven fraud tool, then you will be hacked and you will lose money, right? One way or another, hacked or fooled or whatever you want to call it. And the days of fraud that it is stolen credit cards, fine, yeah, there is always a stolen credit card, but it's not a problem.
No, I get that, right? So here's a thought, right? And please mince it if you'd like to, right? Or smash it as whatever you prefer, right? My humble view is we're entering a very interesting era where you have sort of real time trade off between speed, right? Level of fraud, authorization rate, which is quite critical in sort of our business and payments, and then cost, right? Now, I understand, this is a battle of digital sort of algorithms, but these trade-offs, how are you codifying these trade-offs into the thinking of the decision making in the business? Because I'm assuming there's still a human element to all of this, right?
A human element to what?
To the fact that trade-offs, right? So how are we trading off in real time, speed, fraud, auth rate, cost?
The
Because
trade
there's quite a
the trade-off mainly sits actually only in decision making. It is related to onboarding. I would say that from a fraud prevention, transaction monitoring, risk underwriting, the AI today already does a much better job than any human, and nobody is afraid of its decision making. I think that the place where still people don't feel comfortable, and it's because of ignorance and not because of performance, is the AI that makes a decision that the client can go live and start transacting without the human being involved, because they feel it is a type of an autonomous car like of experience, right? Sit and there is no steering wheel and it will take you somewhere. But the reality is that humans also make mistakes.
no,
It's
they do.
just covered up, not reported. And even when it's covered up and not reported, still statistically, at least at Rapid, humans are doing almost double more mistakes than the AI, right? Because who are the humans at the end of the day? It's a person that gets a salary. Sometimes he has a good job, sometimes a good day, a bad day, a problem with the spouse, got trained by somebody else, didn't read the material, didn't read the memo, didn't read the email. You know what? AI never has a bad day. Nobody ever bugs him. He reads every single email, every single memo, and he works 24 by 7 and he knows all the languages. So, where do you want to bet, right? And I think that this is the place that we still have this friction and challenge. But I would say that by the end of next year, I don't see anybody ever talks about it again.
Okay. But we'll hold you on it. Next year, I'll call you back on the show to see where we are on that. Right. Uh, we're going to pivot. We're going to talk a little bit about Rapyd. Okay. So I'm going to go back in time. The first time I think I met Rapyd, I think we had a very brief meeting. I think it was years back. I think it was at Singapore FinTech Festival, but I'm not quite sure. It was quite interesting. You were the first company that I had ever heard which said Rapyd FinTech as a service, right? And it was actually that line which got me to your booth, right? Because I actually wanted to understand. What I want to hear is not about fintech as a service, but what I want to hear about is what was the original vision behind creating Rapyd, and how's that evolved?
So the vision was not to create Rapyd. We started actually a company that was supposed to be a consumer-facing PayPal competitor. Three guys not coming from payments, coming from cloud computing, trying to build a consumer payments product, stumbled into every single shit show that exists on planet Earth when you're building a financial services product, getting regulated licenses, trying to find somebody that will do acquiring, issuing, money movement, effects, ledger wallet. And we looked at each other and said, how can it be? It was back then 2016, 17. that there are no platforms, that you need to go and find 10 different companies to assemble a product that will operate in one country or in one region. And it didn't make any sense for us. And then we decided to stop it and pivot the idea to a platform play, because we believed that at the end of the day, when somebody wants to build a financial services product, they want to have the same experience like in AWS or Google Compute Cloud. You come in, you have a bunch of services, servers, network, firewalls, whatever you want, databases, and you just do it. And this is what we've done with Rapyd, the fintech as a service, which means you do whatever you want. You want to issue wallets, IBANs, card acquiring, issuing, FX, you want fraud prevention, you want KYB, everything in one platform. And then the usage is quite easier.
Okay. And the evolution over the years as
The evolution, there was a division, and the evolution, it was actually strange because as soon as we did it, we started to have big clients, enterprise clients immediately came in, which was a surprise. Then suddenly we had the wave because of the pandemic of a lot of SMBs and medium. And then we basically got into a situation in around 2023 that we understood that our sweet spot is like high end of the mid market, where people are still not a gigantic enterprise that has politics and everything is super complex, and also not a very small SMB that has a small use case. And we got to this situation, in the high end mid market where we have a great product market fit, great territory fit, and we can execute in a very high scale.
and your go to market is Rapyd is your your payments platform which solves most
So,
of your
so,
cross border.
so no, because the thing is that it's confusing for salespeople, right? Salespeople, they need a very short pitch. But what Rapyd allows you to do as a salesperson is, if you do your homework before you go to the meeting, you find that thing that you can sell. Because we have so many different things. So you can go into a meeting with a gigantic client that says, I don't need anything, I have everything. I work with Edian, I work with Marketa, whatever it is. And then the salesperson asks him, okay, but you have to have had some kind of a problem. And then he says, you know what? Can you do Indonesia domestic payments for me? And the answer is yes. Yeah, we can do it. Foot through the door, you do it, and then you lend and expand, right? And that's the beauty, because there's always something that we can do. And of course, if you go a little bit down market on the medium side, yeah, they come in, they take everything, they build on top of us, huge amount of stuff. But you have flexibility as a salesperson, but the pitch is never going to be, we can do whatever you want, pick and choose, because then it's not really sharp, right? It needs to be extremely sharp to the point.
Okay. And if I bring you back to sort of our part of the world, which is sort of my last legs of question, you obviously mentioned you got a very large office already in the UAE in terms of number of people. Um, how's the reception been from, I guess, the segment that you target in this part of the world? Is it still too complex to work here rather than just having your team here? And is this sort of a core growth area?
I think that UAE, still there is this defensive moves of the regulator to the banks, right? It's a bit similar to some other markets where the banks have to be protected because they have the history, they're owned by the right people, nobody wants them to shrink, right? And I think UAE is still in the place where the banks are protected, and it's very challenging, even if you're a very strong innovative fintech, to really make a difference in domestically in the market, right? The banks also control, your safeguarding accounts. They control a lot of the compliance. That there are onboarding requirements, in the UAE that still are a little bit old school. Things are changing. I'm sure they will change significantly over the next several years, but until today, it's still been, one of these markets that it's much harder to penetrate locally to make a change.
Okay. But you did mention that Dubai or the UAE has been a great sort of talent base for you or a capability.
It's an amazing, pool of talent base, especially when you need a lot of different nationalities, when you're building an international payments company and you need different ways of looking at things, right? So we have an office with 25 different nationalities out of 100 plus people. And the people from India might bring one approach, the people from France or Australia or Israel or Pakistan, or it doesn't matter where you're from or you're local or the UAE, the different way of thinking and the usage of payments really helps us. Teams like to work hard, and we really like what we see there from a talent perspective.
Awesome. I'm going to put you on the spot. Is an IPO around the corner? You've
Yes,
hit the
Q1 27.
Q1 2027. All right. So, and you're working towards it, or is this is this public news?
Now it's public.
Now, well, I can always say there's a first in Couchonomics ever, right? So there we go. No, Arik, last question before we end it. 3 to 5 years from now, is Rapyd just a similar organization, deeply embracing AI, riding the stablecoin or digital assets wave, or are you going to look to be a little bit more different than what you are today?
I think that 3 years down the road, for sure, we will be super AI and stablecoin, embedded. I think that we will be probably in a 3 year time frame. I would say 2x revenue for what we are now, minimum 3x, excuse me, revenue than what we are now, but with 50% less people because of AI. In a 5 year time frame, something will show up probably after 3 years, and we rock the boat again. And this is what we like about this business. So I can't predict that, but 3 years, yeah.
Excellent. Arik, I want to thank you for coming on the show and having a chat again. I'm hoping our paths will cross. We might meet earlier. If not, then maybe meet you at Singapore at the end of the year, right? Have a great day and best of luck.
Thank you very much.
All right. So, ladies and gentlemen, that was Arik Shtilman, who is the CEO and co-founder of Rapyd. If there's one thing for today's show, I want someone to say something which apparently he's never said before, which is his IPO date. But he's also given us very strong statements, which are actually some very interesting statements to take away and reflect on, especially to a lot of the financial services clients who do sort of tune into this show. You can see about the commitment to embrace to AI. So with that, I will say goodbye till next week. Thank you.